Welcome to the Weekly Option, the podcast for people interested in trading stock options. Each week, we cover trade ideas and opportunities in the stock market right now. Whether you're a beginner, a professional, or just curious about options, this is the show for you. Let's get started. Welcome to the Weekly Option. This is episode 321 on May the 3rd, 2024. I'm your host, Eric, and in this week's show, we'll cover the trades from last week on GameStop Corporation, JD.com Inc., and Snap Inc., and we discuss three new trades on Beyond Meat, New Holdings, and Alcoa Corporation. Now, it's always great to hear from listeners. If you have any questions about the trades presented here on the show or even about your own positions, feel free to email me. You can email questions to eric@theweeklyoption.com. That's ERIC@theweeklyoption.com. I've also created a few videos to teach you all the basics of option trading that you'll need to know to be able to follow along with me on this show. You can visit our website and click on the videos tab to watch them, or visit the YouTube channel for the Weekly Option. Now, the U.S. equity markets finished the week a little higher. The Dow Jones Industrial Average grew 436 points, closing at 38,675 points. The S&P 500 index picked up 27 points, ending the week at 5,127 points. And now it's time for the topic of the week. The topic of the week this week is repetition. I was hanging out with a good friend of mine a little earlier this week, and we both agreed on how to get better at doing math. It's not by memorizing more formulas, it's by actually using them. If you want to get better at math, do more math. That is the same logic behind trading options or even using technical analysis to understand stock. You need more reps or repetitions. We all have heard that practice makes perfect. In fact, you might be tired of hearing that, but that doesn't make it any less true. If you want to get good at anything, you have to do more of it and do it more often. I am much better at reading markets now than I was 20 years ago. I've had some time to practice. That is most likely true in your profession too. How good were you at what you do back in 2014 or even in 2004? The same holds true for trading. That's why I stress risk management so often. You need to have enough capital to be able to stay in the game long enough to get good at this. I've heard of basketball players like Kobe Bryant, Michael Jordan, and Steph Curry taking an extra 100 or 200, sometimes even 1,000 shots at the end of every night, even after practice. It's no wonder they were so good at their skill. I'm not sure what the exact equivalent is in option trading for taking free throws, but maybe it's paper trading if you don't have any capital, or maybe it's making a bunch of small trades if you only have a little bit of capital. You have to increase the amount of repetitions invested into learning your craft in order to start to get good. Put in the work and increase the likelihood of the outcome that you hope for. All right, so that's it for the topic of the week. Let's go ahead and dive into the trading review for last week's trades. We're going to start off with the covered call. We looked at GameStop Corporation, symbol G as in golf, M as in Mike, E as in echo. At the time, the stock was trading for $11.90 per share. I looked at buying stock and selling the May 12 call at $1.26, hoping for a return of 11.43% in 3 weeks. Well, shares of GameStop grew $4.61, ending the week at $16.51 per share. The call option that we sold grew $3.79, allowing for a profit of 82 cents if you were to close the trade out immediately. Now, if stock expires above $12 at expiration, you stand to earn 54 cents more in 2 weeks. So at these stock levels, I would definitely look to hold this trade for another couple of weeks and not make any adjustments. Of course, if you were to get assigned on the call option that you sold prior to expiration, you will have to deliver the shares of stock and you would actually earn your full expected return also. So there's really no reason to close this trade early or make an adjustment. This one's winning, so nice trade. Next up, we have the credit spread on JD.com, symbol J as in Juliet, D as in Delta. At the time, the stock was trading for $30.34 per share. I looked at selling the May 29 put spread at 17 cents, which could give us a maximum possible loss of 33 cents per spread. Well, shares of JD rose $2.53, ending the week at $32.87 per share. The out-of-the-money put spread that we sold is now even more out of the money, and that means this spread is making money for us. If stock expires above $29.50 per share in 2 weeks, this spread is going to expire out of the money, and that'll allow us to keep all of the premium we collected for selling the spread. That's the goal, so it's worked out so far. I'll keep track of the stock price over the next couple weeks. No adjustments are needed in this trade either. And to finish up the review of last week's trades, we have the debit spread on Snap Inc., symbol S as in Sierra, N as in November, A as in Alpha, P as in Papa. At the time, the stock was trading for $14.53 per share. I looked at buying the May 14.5 call spread for 31 cents. That could give me a maximum gain of 19 cents, or that's a 61.29% return in 3 weeks. Well, shares of Snap rose $1.71, ending the week at $16.24 per share. The in-the-money call spread that we bought is now even more in the money. And with 2 weeks left, this trade is looking pretty good as well. You could always make an adjustment to increase the profit, but honestly, there's no need to, especially with so little time left until expiration. So no adjustments are needed on this one as well. That's 3 for 3. I always like it when all of the trades work. Of course, that tends to lead to a shorter show, so don't get upset with me. All right, so this will be the last week for using the May 17th expiration for the trades. These trades are inherently more risky because they have less time remaining until expiration, which also means that there's less time to make an adjustment if we needed or wanted to. So let's go ahead and dive in with that caveat having been said. We're going to start off with our covered call on Beyond Meat, Inc., symbol B as in Bravo, Y as in Yankee, N as in November, D as in Delta. The stock ended the week at $8.23 per share. I'm looking at buying stock and selling the May 8.5 call at 99 cents. That could give us a return of 15.31% in 2 weeks. Then you enter this trade by buying stock for $8.23 per share and selling the May 8.5 call at 99 cents. This trade makes the most money if stock prices finish above $8.50 per share. The break-even price is $7.24 per share, and in real terms, the stock purchase would require $823, and you'll collect $99 for selling the option. Next up, we have the credit spread on new holdings, symbol N as in November, U as in uniform. The stock ended the week at $11.68 per share. I'm looking at selling the May 11.5 put spread at 16 cents, which could give us a maximum possible loss of 34 cents per spread. Now you enter this trade by selling the May 11.5 put at 40 cents and concurrently buying the May 11 put for 24 cents. This is a credit spread because we're selling the spread, and this trade makes the most money if stock prices expire above $11.50 per share. The break-even price on this trade is $11.34 per share, and in real terms, you'll receive $16 per spread that you sell and have $34 at risk. And our final trade on the week is a debit spread on Alcoa Corporation, symbol A as in Alpha, A as in Alpha. The stock ended the week at $36.76 per share. I'm looking at buying the May 36.5 call spread for 32 cents. That could give us a maximum gain of 18 cents per spread, or that's a 56.25% return in 2 weeks. Now you enter this trade by buying the May 36 call for $1.78 and concurrently selling the May 36 half call at $1.46. This is a debit spread because we're buying the spread, and this trade makes the most money if stock prices expire above $36.50 per share. The break-even price on this trade is $36.32 per share. In real terms, you'll pay $32 to enter the spread, and your maximum gain is $18 per spread. So that's it for this week's show. Thank you guys so much for listening. Hey, thanks for the emails I've gotten. I've had some questions about the technical analysis webinar. Thank you for those of you who signed up. I actually am creating it. I'm pre-recording it because so many people couldn't make it on Saturday afternoon. but they'll all have immediate access to the recording as soon as I finish. So if any of you out there still want access to it, I'll give you another week to go ahead and sign up using that same link. And then after that, I'm going to go ahead and close it off. I'll be offering that for more than what I'm charging for access to this first, what would have been a webinar, but the video. So go ahead and get it if you want it at the best price. And if you want to truly understand how I find, well, some of the technical analysis I use to find some of these trades. So go ahead and just shoot me an email if you're interested, or go to the website. You can click on, there's a little banner that mentions the webinar. Just click on that banner. It'll tell you everything you need to know to get signed up. So that's it for this week's show. Looking forward to helping those of you who want more help out. And I'm always appreciative for you guys who listen to the show. So keep listening, keep sharing, have a wonderful weekend. And as always, happy trading.